What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is August 18th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we've got to spend some time to talk about the significant decline we saw in Bitcoin's price over the last 24 hours, with Bitcoin dropping as much as 9%, but closing at around 7.2% to the downside. And this, again, is after already a month of stagnation from the relative highs at around 31,800, where we've continued to pull back slowly but steadily in price, and now it's starting to accelerate. So I want to spend some time to talk about what might have caused this decline, and outside of that as well, try to provide some guidance as to where things might be going over the next couple of weeks and months following this big price move, because it is a significant one. And outside of that as well, we're also going to have a sponsored review of ForexVPS, a leading virtual private service provider in the space for expert advisors or automatic trading algorithms. So if you guys are in that space, I highly recommend you guys stay tuned for that. But we've got a lot to unpack in today's video, so if you happen to enjoy it, consider dropping a like, and let's go ahead and kick off the rambling. All right, so I want to start here with covering one thing, guys. Before we discuss the price move and the significance of it and what might have caused it, I want to make it one thing straight here. For those of you out there who come to this channel for a kind of devil's advocate opinion, who may not completely agree with our position that we're still in a bear market, that we still have time, we need to see more capitulation, and many of you may have previously been in the thought that we're in a bull market and we're quite confident in that, but are now starting to feel that we may not be in the position to continue higher. I want to say that there's no shame in that, guys. And if you feel like you might have gotten it wrong and you need to change trajectory and change your trading position and rethink things, there's no shame in that. And to be honest, at the end of the day, guys, we've made some great calls, but we've also made some wrong calls here on this channel over the last couple of years. So I just want to get that out of the way here. There's no shame in it. And at the end of the day, guys, I'm not here championing that Bitcoin is going down. I'm just trying to, as we've always done on this channel, be realistic about our expectations. So I hope that might mean something to you guys out there who might have been on the other side of the trade. But let's go ahead here. And I just want to go ahead and clarify here what's going on here in the market. So essentially speaking, there are two things that definitely had some weight here when it came to Bitcoin's price. One of them is a story that I'll be honest and just say outright might just be complete FUD, but essentially is a report from the Wall Street Journal that SpaceX has supposedly sold all of its $373 million of Bitcoin. I'm going to be the first to say here that going off of one article from the Wall Street Journal on SpaceX's financials, I don't think is enough to really justify Bitcoin moving down like this, or as a kind of story to be concerned about when it comes to Bitcoin. So I'm going to go ahead and say that right off the bat. But what I think the bigger story is here, and we'll come back to a little bit later on, is Evergrande declaring bankruptcy protection. They filed just the other day for Chapter 15 bankruptcy protection in the New York court. And I want to spend some time to talk a little bit about that later on. Again, just how the macro picture is what we really have to be concerned about. We constantly are focused in the crypto space still, as we have been over the last couple of years as an industry, on the micro space. We're always focused on what's going on in crypto particularly. But at the same time, those same people who fall into that trap are calling that crypto is a new institutional asset, that institutions are going to adopt it, and they completely ignore the macro perspective of what's going on with global liquidity, what's going on with financial markets, and that's where we need to have our attention here. We come back here to what we've talked about over the past couple of weeks here. On the monthly time frame, our momentum indicator has showcased that global liquidity is still in a long-term downtrend. We are now looking like we're ready to revisit back towards the prior lows in September and continue to move lower from this point. And again, as I mentioned with kind of looking at BNB's chart, right? Essentially speaking, if we collapse through here, we are entering into no man's land until $20.5 trillion. That's the last significant range of liquidity here. Now, I'm not saying, again, we have to go down all there. However, we're going to likely be somewhere in this range. And that's another $2, $3, $4 trillion of liquidity that is likely going to have to be absorbed from the system as central banks aim to tame inflation. And I promise you guys here, as equities and crypto are already trading at a premium versus the global liquidity, right? They've been moving up while global liquidity is moving down. That divergence, the liquidity divergence, which we talked about here on this channel, is essentially going to start to close. And that is going to make the decline on these assets much more significant. It is going to cool down the housing market. It is going to essentially lead towards higher interest rates in the economy, higher costs for capital. And that is going to even crush cash-rich tech giants like Apple, which went back to trading at a ridiculous $3 trillion valuation with lower growth than where it was before. like much significant growth declines when it comes towards its quarterly expectations and annual growth. And essentially that's why Apple has continued to bleed here. You cannot have the largest stocks like Apple and Microsoft bleeding week by week by week by week here, and now starting to get a red trend flip here on many of these stocks, and expect that Bitcoin's just going to do well. Bitcoin can't be a $500 billion, trillion dollar asset and be this kind of asset that supposedly BlackRock type of investors are going to step in and buy in and just scoop up the market. Yet the broader asset sentiment is negative. Global liquidity is contracting. Bitcoin is not an inflation hedge. It is a money debasement hedge. The more you print, Bitcoin does better. The more you contract liquidity and remove that money from the system and you remove credit, the more Bitcoin is going to go down, Microsoft is going to go down, Apple is going to go down. There is less money in the system, and essentially dollars are becoming more scarce. And again, we pointed this on the Dixie here, right? The dollar index has been pushing up here after a significant deviation back here in July. It's been on a nice uptrend, and it's about to likely clear through in a significant way many of these descending lines of resistance. It's easier now than ever for the dollar to make a significant move to the upside. And I want to go ahead and again point towards the VIX here. Right, the VIX is where I'm really concerned here, guys, because we've looked at a lot of charts today, but I gotta tell you guys, if we take a look at the VIX, this is a long-term line of ascending support where volatility had already been building up for a period of time. But we had an irrational phase here. The relief rally went much further than many people intended, even us here. I'll be completely candid in saying that, but I want to bring your attention to something. We've talked about deviations before, when we clear through trend lines, but we aren't able to hold them. And essentially when we come back above this range, if we get a bid around 21 or 22 on the VIX, I gotta tell you guys, the VIX is gonna start spiking big time. And I don't know what the catalyst is gonna be. Could be commercial real estate. It could be Evergrande, again, setting the sentiment here in the tone that we've got a long way to go, that more bad debt and more companies are gonna go under, and more bad ideas and unfortunately just outright scams or overvalued companies. There's gonna be a lot more valuation contraction than many people thought previously, right? But this is gonna mean equities and crypto are going to drop significantly. This news out of Evergrande is not a small piece of news, right? This has been a 2-year, I think, story of hopeful recovery and trying to fix things, but it is now a telltale sign that China as an economy is not recovering. It is going through a lot of key issues, not only with its youth population, but outside of that as well, its geopolitical stance on the world as the manufacturing hub of the world. That is now starting to be broken and fractionalized. And that is not only going to hurt China, but it is going to hurt the global economy for the next year or two to come. It is going to slow down trade. It's going to slow down economic activity. And what better time than now to tighten liquidity when you have reasons for the economy slowing here? To just go ahead, start taking it into hands and try to get inflation down on a global basis so that everyone is better off in the future. Yes, we have to go through a temporary recession. It is now finally likely upon us here, guys. The economic indicators are flashing. We've seen, as we talked about the other day, how the yield curve is now starting to uninvert, which is actually not a good sign. It means that we're about to get into the mayhem for the next year, year and a half. And then again, this not only talks about, what's going to happen here for equities, like in the Nasdaq, right? Are all of these gains going to be given up here? Do we really have the foundation to start setting higher lows and higher highs here with balance sheet contraction where we're already diverged from it, right? What about Bitcoin? Can Bitcoin, again, as we come back to it, can Bitcoin really essentially, recover and get back into this channel or clear through this resistance range over the next couple of months? I think eventually, one day it will. But for now, we're not seeing a bid here. This is a supply zone. It's a resistance range for Bitcoin's price. And that means we've got to wait for bidders to come in and provide support at a lower price range. Maybe not as low as the prior lows, but at a minimum, you're going to get Bitcoin at a much better price here over the next couple of weeks and months. That's at least the likely scenario here. And we've had a couple of charts here we've brought up here, guys, like with the ARK investment ETF, right? This was, again, the darling during the 2020, 2021 era. This is likely coming down towards generational lows back towards 2016 or down here around $20. It's ranged between 2015 and early 2017. A lot of these equities are still overpriced. They're still bleeding capital in an environment where credit is getting ever more expensive. Many of these stocks were born during an era of easy money, and many of them will crater during this period of time because it is going to last much longer than many people think. The FANG stocks, right? The prior market leaders of the last decade are likely not going to be the stocks that lead the way. Unfortunately, they have been now, which likely means that we're in a relief rally. Prior market leaders very rarely ever are the leaders in the next bull market. And we've echoed that point time and time again here, guys, to be cautious about that. Nothing wrong with doing the swing trade, right? Buying these companies when they were perhaps oversold. And yeah, this definitely went beyond our expectations. I'll be candid in saying that. But we've been saying constantly that these stocks are not ready to go to new all-time highs on average. How are Amazon and Netflix and Google, right? How are these names, and also Facebook as well, right? How are they going to get any bigger than they were back during the pandemic? On an inflation-adjusted basis, these companies are actually declining. But people have ignored those facts. People have believed that we can just continue to see these multi-hundred billion dollar, multi-trillion dollar companies just continue to do another 10x over the next couple of years. That's the narrative. They're just going to keep churning higher. We're going to enter into another bull market. These are going to be the same growth stocks. And it's all going to be because of AI. That was the narrative. Well, the AI narrative has collapsed over the past couple of weeks. The real data has come out. People are not using these systems. They have user experience issues. And if AI is not going to save us, then what will? The Fed certainly isn't saving us. Global central banks aren't saving us. And I come back here to my closing point here, guys, before we dive into the review. The key point here at the end of the day is that we need to see more capitulation. We either need to see the Fed come in and save us and start providing liquidity, or it's going to continue moving lower. And I don't think we're going to see that first step where the Fed comes in until we actually get inflation down towards rock bottom levels, not just at 2%, right? But really, we maintain well below 2% for multiple months to come. The Fed needs to knock down inflation, and they need to do it in a big way. Paul Volcker taught us that back during the 70s and 80s, where we essentially saw how the Fed properly dealt with inflation. It wasn't a popular opinion, like our opinion here on the channel, but it was the reality of what was needed in order to tame inflation and provide decades of prosperity, where even with monetary stimulus, the economy didn't experience high degrees of inflation. A 40-year period of innovation and exciting trends in computers, the internet, all kinds of technologies, mobile phones, software applications, computer hardware, and chip technology. There were so many great things that happened because Paul Volcker put down the hammer and allowed for the economy to go through a proper cool down, balance out price stability. People brought trust back into the dollar and the currency. And with that as well, the economy prospered with it over the next coming decades. That is what is needed here. In an environment where assets are priced so highly, we've got to be cautious, guys. But I want to go ahead and dive into this review, guys, because I know some of you out there, and first off, if you guys happen to enjoy the core part of the video and this provides some value, guys, consider dropping a like. It's one of the greatest ways you can support the channel. But I want to go ahead and dive in towards this review of ForexVPS because I know many of you out there are in the crypto space, you're in Forex, you guys are trading commodities, maybe stocks, and essentially speaking, you guys are looking towards trading in an automated fashion. Sometimes these big moves can catch us off guard. And essentially with ForexVPS, you can run automated trading systems 24/7 and make sure that you guys don't miss a beat in the market and that your trading systems don't go under. It's a very important tool, so I'm going to go ahead and kick things off. Alrighty, everyone. So in today's sponsored review, I want to spend some time to talk about a really interesting platform and one in which I feel is absolutely essential to utilize if you happen to be engaging in any form of automated trading in financial markets. Today, we're going to be talking about none other than ForexVPS. Now, for those of you who are hearing about ForexVPS for the first time, I want to spend some time to talk about the fact that ForexVPS is addressing the biggest issue, and in many cases, an unknown issue when it comes to automated trading, and that is uptime. Now, many of you out there are possibly already hearing about automated trading. Some of you have possibly dabbled a little bit in it, and some of you may already be running full-fledged major portfolios that are managed by trading bots, customized algorithms, or expert advisors, otherwise known as EAs. All these different labels that we utilize for forms of automated trading take away the need to constantly be watching the charts and allow an automated system to look for certain parameters in order to engage in and out of trades, hopefully to make a profit in the long run. But no matter how great of a system you may have, no matter which brokerages you might be using to minimize your fee profile, at the end of the day, the biggest issue you have when it comes to automated trading is uptime. If you happen to be running your automated trading system on a local device like your computer or laptop, you run significant risk of potentially losing access for trading on that algorithm, which can mean that orders won't execute properly and you could potentially end up losing funds even if your bot would have been successful. The reason for this is because it's dependent on the local machine. So if you happen to lose your internet connection, maybe a connection to the Wi-Fi, or there's a power outage, you're missing not only opportunities in the market, but your bot can potentially not execute the protective measures like stop losses or take profits that would allow you to lock in gains or protect yourself and minimize potential losses. This is why it is essential to have a virtual private server. And at the end of the day, I want to make one thing clear here. While I'm a big fan of what ForexVPS offers, the key signal here is this: no matter if you choose ForexVPS or not, it is essential to have a virtual private server. Essentially, for those who may not know, a virtual private server is a tool or a form of infrastructure, IT infrastructure, that allows you to host your trading algorithm or your automated trading system 24/7 somewhere in the world. There are all types of different locations that you can choose. ForexVPS, in fact, has the largest network of potential locations. And what's great about this is by having such a wide network, you can not only know that your algorithm or essentially your EA or expert advisor is running 24/7 in the background, but outside of that as well, you can choose specific locations near your brokerage platform that cuts down on latency. In fact, one of the biggest things about ForexVPS that for me is a big deal when you're connecting to trading systems like MetaTrader 4 and trading in Forex markets, potentially trading contracts for difference for cryptocurrencies and commodities and so many other markets, is the fact that for ForexVPS, they offer near instant execution as fast as 1 millisecond on many trades. And that is vital when you're going through the trading process in practically any market, because you're constantly having to worry at the end of the day as a trader about the potential issues of things such as slippage and not being able to essentially get the price that your bot wants to execute on. When you consider trading fees and all the expenses that can come with doing trades, making sure that you minimize that impact of slippage and get the actual rate your bot intended to get when making market orders is a huge deal towards making sure that your trading system is profitable long term. So it's not just about the kind of insurance policy or the safety net of making sure that your funds are able to be traded in and out constantly through an automated trading system in your respective markets, but also making sure as well that you're maximizing those returns and also protecting yourself when getting stops triggered or other protective measures on your trades. Now, when choosing a VPS provider, it's important to understand the offering offered by that provider. And while there are some other players in the market, I feel that ForexVPS offers the best offering on the market, not only when it comes to the essentials that you need to get right, but also the whole range of perks that they add on top that practically no other partner out there is going to offer to you. The first thing is the fundamentals. Not only do they offer 100% uptime guarantee, making sure that your automated trading system can operate 24/7 on your VPS, but outside of that as well, they offer technical support 24/7 to counter any issues that might occur and help you out with setup, as well as a simple setup process taking as little as 5 minutes. And one really great thing is I'm not only going to be giving you guys a 20% discount code link down below in the description that you can use on any of the plans for ForexVPS, but plans on the platform start for as little as 30 euros to 28 euros, depending on which package you choose, whether it be monthly, 6-month to yearly. I recommend the basic plus package, but no matter which one you utilize, the great thing is that ForexVPS offers a 14-day money-back guarantee. So essentially, within that first 14 days of your subscription, if you happen to find that ForexVPS doesn't offer what you need for your expert advisor or your automated trading system, or if you happen to feel that you don't really need ForexVPS for your trading, that's totally fine. There's a 14-day money-back guarantee on all types of packages and timeframes. So it doesn't matter if you get the basic plus, standard or high frequency package, and it doesn't matter if you subscribe for the monthly, 6-month, or yearly, taking advantage of those long-term commitment discounts. You have your money back guarantee for those first 14 days, which I think is great. It essentially means you can try it risk-free and see if it's for you. But outside of the money back guarantee policy, the big thing that sold me is the focus on offering a whole range of free perks for those who are subscribed to ForexVPS that can help you to maximize the performance of your expert advisor or automated trading system. They partner with 2 key platforms, How to Trade and Track a Trader. Essentially speaking, for both of these platforms, they offer 2 separate things. How to Trade focuses on offering all kinds of educational resources and chat rooms as well as live streams to help you learn about how markets actually fundamentally work and how you can essentially build more successful expert advisors in order to take advantage of automated processes within the market. This is really great because it gives you a whole range of education through live streams, the core chat room, their education tools, and also their core market analysis to allow you to dive deeper into various pieces of information on what's going on in the markets. It's always great to have someone else you can kind of lean into when you're building these systems, learning from others who have been in the industry for a long term. So I think it's important to have something like this when you're getting started rather than going blind off of just some advice online about how to set up an EA for the first time. Working with real experts is going to really give you a cutting edge on this. Outside of that as well, they also have Track a Trader. Now essentially Track a Trader is kind of a visualized tool that allows you to actually visualize your portfolio and your expert advisor's returns, whether it be kind of profit loss statements, your winning and losing trades, and other types of analytics that are going to help you to gain insights, valuable insights on top of your trading activities within your EA. When you're running these automated systems, it's incredibly important to be able to visualize the actual profitability and to see whether or not over time your EA is essentially performing better or worse. It tends to be that there is a necessary amount of maintenance required when it comes to EAs, and essentially seeing whether or not a system is working or not, or you're still maintaining degrees of profitability, is vital when you're running these systems. So I think, again, the analytical portion here, this free package that comes with any of the VPS subscriptions, as well as the education that comes from How to Trade, is going to give you a massive cutting edge when it comes to your EA performance in the market. But putting all that aside, guys, this is the core information when it comes towards ForexVPS. But again, going through the sign-up process is relatively simple. I'll walk through it here, right here in the video. Essentially, we can click on the $28 package here, which is the Basic Plus. I'm going to go ahead, set it on the yearly here, and click Order Now. From there, we simply have to type in our email. And finally, we just simply follow the standard billing process where we finalize creating our account and settle the payment. And as we can see within the ForexVPS dashboard, things are relatively intuitive. We can see a broad overview here on the client area that showcases how much VPSs we're running, how many signups we've brought in our affiliate link, and also any past invoices. By clicking on the My Services label on the top handbar, we can see all of our current VPSs. As you can see, I've set up a Basic Plus network here that is currently active. And along with that, I can add new services in case I need to bolster my computational resources to run more expert advisors, or I want to upgrade one of my current plans. Outside of that as well, we can see any past billings that have been filed on the account. We can click on the Refer and Earn section, which can be very valuable for some of you out there who are looking to earn some additional side income, as we can bring more people to the platform and earn 10% on top of any payments made. And along with that as well, we have the Free Perks section, which gives us access towards How to Trade and many other valuable perks. These perks can be incredibly valuable towards getting you more additional insight on trading in the markets and can make sure that you have a proper setup for your expert advisor. The great thing about all of this is that ForexVPS not only itself has a great offering for the price it gives, but for me personally, as I was comparing other offerings on the market, one of the big things I always check for is the Trustpilot reviews. And as I was going through the reviews that people were giving for ForexVPS, it seemed like this was an incredibly reliable service that offers exactly what it promises: a 24/7 uptime opportunity for your EA to continue trading out in the market and hopefully doing what it does best, hopefully generating profits. And at the end of the day, while ForexVPS doesn't help guarantee any greater profit or loss, what it does help guarantee is that your trading system will be able to run in an automated fashion as intended. And if you can have that, and you have successful systems you implement, it's going to allow you to make profit in the long run. And that's the key goal here that we want to focus on. Essentially, having a tool that makes sure there's no interruptions towards the great trading systems you have deployed. So that's it for today's review, guys. Thank you all so much for checking into this video. If you guys haven't already, take advantage of the discount code link down below if you're interested in giving the platform a try. And again, there's that 14-day money-back guarantee if it happens to not be the platform for you. But outside of that as well, if you guys are interested in content like this here on the channel, consider dropping a like. It's one of the greatest ways you can support the channel. Until the next time, I'll see you guys in the next video. Take care, everyone.